And we begin with a quick look at oil markets, or oil prices, which are trading higher this morning. Brent is currently around $93 a barrel, while US oil is trading more than $89 a barrel. The higher prices come as Washington and Tehran have yet to finalize a deal despite optimism last week. Well, for more on how investors are reading the uncertainty around the peace deal, I'm joined in studio by Jameel Ahmad, Chief Analyst at GTC. Jameel, good to have you in. Just on oil then, if we start there, I mean, the fact that President Trump has said he's in no hurry for a deal, does that change anything? Does that have some bearing on what we're seeing?
Not really, because if you look at the investor behavior overall, they reacted very calmly to this situation. Last week, oil prices dropped around 10%. We went from US oil being at the beginning of last week close to 100 US dollars. At the end of the week, it traded below 90. That's the biggest weekly fall since April. And considering how volatile markets have been, it's still a very sentiment-driven market. So we cannot suggest here that it's all clear, because we need a deal that's on the table and signatures signing that is going to be a ceasefire extension and hopefully a final deal. But at the moment, oil prices are looking like they're ranging somewhere between 80 and 100 US dollars. But Wall Street and investors overall are confident, I would say, with their expectations of pricing, that we've seen the biggest moves higher for oil prices so far. Of course, that's going to cause some damage to the world economy anyway when it comes to inflation, central bank themes and so forth. But at the moment, we're looking at oil prices gradually going a bit lower. But if you were going to ask me, are we going to go back to where we were when we started, which was roughly 65 US dollars? I think that's very optimistic. We might be able to see the lower 80s, potentially lower than that, should the Strait of Hormuz actually get cleared and the ships, no pun intended, remain stuck at sea. Yeah. But at the moment, that's where oil prices are.
Okay, so some cautious optimism in the oil markets, perhaps a bit more optimism in markets in general then. Now we've seen sort of the AI or record highs in the NASDAQ, the S&P, even in Asian markets as well.
Exactly. It's not just in Wall Street where you've got the S&P 500, which has managed to record 9 consecutive weekly gains. That's the longest run since 2023. You have gains also monthly in May for the S&P 500, the NASDAQ, the Dow Jones. We've already mentioned what happened in South Korea. Japanese markets also rallying. And it looks like investors are optimistic about AI. The corporate earnings season in the United States, we're not watching it that closely because of geopolitics very much dominating market behavior. But you did get 84% of S&P 500 companies so far above expectations on revenue. That beats the 5-year average, which is roughly around 78%. It suggests that AI is helping companies, it's helping profitability. So it's no longer tip of tongue. Investors actually believe it's there for the long term.
Okay, so the AI gold rush then is not just affecting AI companies, but just AI more broadly is also lifting companies more generally.
It's a very fashionable term right now. You mentioned AI and companies see it as improving profitability, and that's why investors are pricing in so much, I would say, increased advances into AI. But looking away from AI, we still have issues with the world economy, geopolitics, what's going to happen with central bank themes. Inflation expectations are very much anchored. We saw that the highest US inflation reading for roughly 3 years. That's going to increase the temptation that the Federal Reserve, the US Central Bank, is not only going to remain unchanged when it comes to not lowering interest rates in 2026, but should that inflation rate go back above 4%, you might see some nervousness that the Fed might actually need to raise interest rates, which is going to be the opposite of what the US administration wants. And of course, with the European Central Bank very much looking to pull the trigger in June. But should that inflation reading come in higher than expectations or suggest that inflation's here to stay for a prolonged period, we might see 2 to 3 interest rate increases in the Eurozone from the ECB this year.
Well, that's something President Trump won't want to hear for sure. Jameel, thanks very much for coming in, putting that in context for us. Jameel Ahmad there, Chief Analyst at GTC.